What's up, everyone? Dylan here. I wanted to hop on to talk about some updates that have occurred in the market since Monday, which was the last time I posted a YouTube video. On Monday, I posted a YouTube video regarding the S&P versus VIX reoccurring pattern that has been happening the last 3 weeks. What that pattern was this. Each Friday for 3 weeks in a row, the S&P topped out. Those topping points on the S&P not only occurred on Friday, but they also coincided with VIX bouncing at critical support, which was between 16.4 and 16.25. So I'm going to go ahead and draw that and kind of just refresh everyone's memory. Okay, so from 16.4 to 16.25, the VIX had critical support. Okay, so essentially what was happening was each Friday, the S&P would top out, which coincided with the VIX coming into this 16.4 to 16.25 area. Essentially, the VIX would be supported at that support area, which would ultimately put more pressure on the S&P, allowing the sellers to have the advantage in pushing price lower. Not only was it topping out on Friday, but the other part of the pattern was the fact that it was bottoming either on the Sunday night reopen for the futures or the following morning on Monday. So what would happen is it would top out Friday, sell off into a low that either occurred on the Sunday night reopen or Monday, and then from then on, from Sunday/Monday into Friday, every single S&P dip would be bought. Okay, it would then lead into Friday where the VIX bounced at that support, and then what would happen? The S&P would fall down on Friday and do it and repeat that same cycle. So that pattern happened for 3 weeks in a row. And that's why on Monday, I talked about that reoccurring pattern and said, hey, considering it has repeated itself 3 times in a row, it's definitely a good idea to look out for that going forward. However, as you can see on my chart here, today's Friday, and instead of the S&P selling off as it did the last 3 weeks, it held up very, very, very well. Okay, it was very, very resilient, and basically broke that pattern. So what has changed? Okay, that is what I'm going to talk about right now. Very, very, very important. The massive change that occurred was the fact that the Nasdaq broke out of a key trend line. So I'm going to go ahead and draw the trend line. I'm going to use a channel because it's a bit more defined than a single line. And as you can see, stemming from all-time highs, which were made on December 16th, this channel got tested 4, 5, 6 different times before the Nasdaq managed to break out of it yesterday on Thursday. Okay, so essentially what this did was it allowed the overall market to be supported because the bull inflows were coming into the Nasdaq as it broke out of this big wedge. And there's a nice quote that I like to use, and it goes something like this: the bigger the base, the larger the space. Meaning, when you have a consolidation period, such as the one we've seen over the last 2 months, right? The longer that base is, that basing period or accumulation period, right? The longer it is in terms of time value, in this case it was 2 months, the larger the space is when that instrument decides to break out. So essentially, because the Nasdaq has been basically going sideways for the last 2 months, it sets up for this breakout to have a lot of upside potential. So basically, like I said, the fact that the bulls were able to break out of that wedge pattern is very, very, very bullish, especially because of the accumulation pattern being, 2 months long. So when I say wedge, it was basically this wedge that I am referring to, right? The lower band started on October 1st, and then the upper band stems from December 16th. And basically, for 2 months, it was going in between both top and bottom band up until this Thursday when it broke out. So what did that allow for? Okay, the Nasdaq breaking out allowed for basically the bulls to really, really take control and put more pressure on the folks that were shorting this market. So as a result, like I said, instead of today selling off for the fourth straight Friday in a row, the S&P was able to hold up with nice strength and show a sense of resiliency. Okay, so not only did the Nasdaq break out, but it also retested that general area. Okay, in fact, if you want to pause this, I basically put what I'm talking about in this video in written form. If you want to talk, look at that. Okay, so pause there. So yesterday at 1:38 p.m. during right before Trump was set to speak about the reciprocal tariffs, I posted that the retest at that channel got bought, right? Essentially trying to show a key sense or key piece of context. Okay, so that was the bulls showing their hand that, hey, we have clear control now. So since then, it has rallied as much as 300 handles and then some. Okay, on top of that, the S&P also showed a very, very nice piece of context as well, right? Using a similar wedge pattern, right? I'm gonna draw a top band from the high of January 24th, basically when this whole VIX / S&P pattern started, right? It also broke above that on Thursday as well. Okay, so it wasn't just the Nasdaq breaking out of a key 2-month accumulation pattern, it was also the S&P participating in the rally as well. On top of that, for the first time in 4 weeks, the S&P managed to break above the previous Friday high. You can see the last 3 Friday highs were unable to be broken on the subsequent weeks. So, you take the Friday from January 24th and the following week was unable to break that high. Then you take the high from the second week, from January 31st, and yet again, the subsequent week was unable to take out that previous high. So the last 3 weeks, or 2 weeks, I should say, the last 2 weeks have been unable to take out the previous week's high. This week, however, was the first week to not only break above previous week's high, but also clearly show that the bulls were in control, because not only, like I said, not only did it break above the previous week high, but the bulls were there to defend that previous high on the dip. Okay, very, very important. Similar to the Nasdaq dip getting bought as well on that retest. So those were the very, very important changes that have occurred since Monday. So going forward, I want to definitely keep an eye on this trend line on the S&P. The bulls will technically have full control as long as dips on the S&P get bought above that trend line. So if you see any dips occur, starting next week, where the S&P wants to pull back towards 6,100-ish, you want to see that area get bought by the bulls, okay? And if it cannot get bought there, then the S&P goes into a more neutral environment where both shorts and longs can be justifiable. But as long as the S&P holds above there on dips, technically speaking, the dips are more likely to get bought from a probability standpoint. Okay, so in terms of single or specific names as well that have helped the bulls really prosper this week, I wanted to talk about Tesla. Tesla, I had posted a trade idea on the, what was that? On February 11th, which was on Tuesday. I said, hey, I'll grab some week out calls, meaning next week expiration, February 21st, for the 340 strike on Tesla if it fills that gap fill at 324.70-ish. Okay, and then I highlighted some aspects of that trade, and I went into more detail on the Academy webinar that I did. So 324.7-ish, if you guys recall, you would know that Tesla was in a free fall where it basically, from the start or the end of January to mid-February, it had dropped 22%. Okay, basically since February. Since February began, I should say. Okay, where did it come down to? Right around that 324.70-ish level. Okay, and since then, it has rallied about as much as 10%. So the fact that a mega cap name is now participating in this recent rally, whereas you go back a week ago and it was in a free fall bleed pattern, right? The fact that it is now stabilized has ultimately been helping the S&P and the Nasdaq, become stable and much stronger. So the most continuous and strongest moves that have clear direction occur when you have all of the mega cap names, also following suit. Okay, so essentially what I'm saying is the S&P and the Nasdaq, it would be very, very difficult to go on a strong trend if it was missing some of the mega cap names following suit. So for example, the S&P and the Nasdaq would struggle to rally in a very, very strong and continuous manner if it lacked support from, say, Apple, Nvidia, Amazon, and all of those stocks were bleeding lower. It would be very, very difficult for the indices to be propped up. However, when you add all, the vast majority of those mega cap names are also holding up very, very well and trending nicely as well, that ultimately allows for the indices to continue to the upside. So having Tesla kind of come back and start to bounce from this general support area after dropping 22% in 2 weeks is a nice, helpful sign. So like I said, going forward, the S&P wants to hold this general area on any retest if that occur. If it is unable to do so, the bulls don't have as much of an advantage. So hopefully this was helpful going into next week, and I will talk to you guys soon. Peace.